Hello traders, the title of the video is how to sweeten Fibonacci trading strategies in the financial markets. The financial instrument that we are analyzing today is Mattel Epic MAT, Mattel Incorporated, belonging to the consumer cyclical sector. Mattel is a component of the Nasdaq 100. This is an American stock, all right? But today the main topic is about how to sweeten Fibonacci trading strategies in the financial market. So if you are trading stock, commodity, futures, or currencies, all right, you should learn to master a Fibonacci. If you are new to Fibonacci trading, okay, go to www.dayprotrader.com or subscribe to Day Pro Traders YouTube channel and check our playlist about Fibonacci extension, Fibonacci retracement, and Fibonacci trading. All right. So a lot of traders already know about what we call the sweet spot Fibonacci trading zone. What I'm about to do today, all right, is a little bit different. I want to show traders a simple strategy that they can use, okay, a simple trading approach that they can use to sweeten, all right, their Fibonacci trading strategies in the financial market. So we are talking about the sweet spot zone. Is the zone between the 50% and the 61.8% Fibonacci retracement level. So this is what the professionals like to call the sweet spot zone or the sweet spot Fibonacci trading zone. So you may say, why they call it a sweet spot zone? That's a very good question, especially if you are a new trader. The reason why they call it a sweet spot zone is that after a bullish trend, if the price comes down to the zone between the 50% and 61.8% level, very often the price usually will find a support, and this is the place where people usually buy, and a new trend will begin from there. In the past, in the old day, that was usually the case. So you see most of the stock will trend, and then we count down to the 50%, 61.8% Fibonacci retracement level, and then boom, again it goes up. Or sometimes the price will go down and then rally up to the zone between the 50%, 61.8% Fibonacci retracement level, which we call the sweet spot zone, and then boom, they start selling again, and a new trend, they probably continue to go down. But today, the market has changed a lot. So that strategy of just buying and selling in the sweet spot zone is not as straightforward as it was in the past, when everybody would just wait for the price to come to the sweet spot zone and buy or sell. That strategy is not as simple as it was before. That's why I'm recording this video today to show traders how they will sweeten, okay, that Fibonacci trading strategy one more time in the financial market. All right, so let's get just started. So what I recommend to traders today in today's financial market, so if you see a bullish trend like this one here, so price was going up from 1988 up to 1998 and then start coming down, okay? Then if you see it start coming down after a trending first, then now you have a good reason to start using the Fibonacci retracement tool to draw it from the low to the high or from the closing price to the closing price. All right. So not all Fibonacci traders draw their Fibonacci retracement the same way. One group may put it all the way to the top, which means from the low to the highest point of the trend. Some traders will put it at the closing price. Today, I want to put it at the closing price because it makes more sense here to me. All right. So once we have done that, we will highlight the 50% Fibonacci retracement level, which is the line here. I'm going to color that into pink. All right, that's the 50% Fibonacci retracement level. And I will color the 61.8% Fibonacci retracement into orange. Here we are. So we have two lines. No, I will not use orange in this case because I have a yellow background. I will use red. All right, so that's the red line there. Okay. So what is happening is that that zone, that's what we call the sweet spot zone, is dividing the prior trend into two zones. All right. So some traders already know this, but I encourage you to stay with us, okay, as I'm going through this discussion today. All right. Hold on a second. I want to do something very fast. So this is the bullish zone above that band, that zone, and the bearish zone is the zone below that sweet spot zone. So what we can do is that we will be looking for, after a trend is completed, and the price come back down like this, we draw those Fibonacci key level, and we want to give priority to bullish trading setup in the bullish zone and give priority to bearish signal below that zone. All right, but it's not as simple as that. All right, so you'll notice that as the price went below that level, you see here. So if the price, this is the one thing you need to understand, if the price goes below that bound, all right, so here it is, come down below it for the first time. If it start going up from the bearish zone where we are now, and it reaches the top of that zone, usually there are sellers. Why? All right, that's a very good question. If you understand that, you will start sweetening your Fibonacci trading strategy. The reason is, this is the bearish zone and this is the bullish zone, yes or no? Now, the price went below that Fibonacci sweet spot zone, is now in the bearish zone, yes or no? So as the price is going up from the bearish zone into the sweet spot zone, which is the, we can say, the frontier or the boundary between the bullish zone and the bearish zone, the bearish traders do not want the price to go back into the bullish zone. So anytime the price goes below, goes into the bearish zone and try to cross the frontier or the boundary into the bullish zone, there will be seller there, try to stop it because they don't want it to go there. Can you see that? So here it is. So you went into the bearish zone, if it goes up, see, first time it comes to the top, trying to go into the bullish zone, people will try to stop it. Will that be useful to you to switch in? So here you'll be looking for an opportunity to sell here using a top-down trading method. It come down again to the lower part of the zone, try to go up again. People try to stop it again. Why? Because it went into the bearish zone, now it's trying to escape the bearish zone. So they don't want it to cross the frontier. Try to remember Mr. Trump talking about a beautiful, all right, wall between the Mexico and United States. All right, the wall, all right, building a wall. So this is a kind of a firewall, if you like to call it that way, here. So, but you want to understand what is happening. If the price go into the bearish zone, and he's trying to cross the frontier to go into the bullish zone, people will try to stop it here. So, so look, it happened here, it happened here, it come near, they try to stop it again. Look, before it even cross it, people try to stop it. Look at that bearish candlestick bar. Before he ran away. All right, now is a good thing to know. All right. Now, the next strategy to switch in your Fibonacci trading is that if the price, you have to understand the movement of the price. If his price was in the bullish zone, as he was here, you see here, he was in the bullish zone, yes or no? So when we are trading, we are paying attention to human being behavior. If the price was in the bullish zone first, all right, and it's trying to escape the bullish zone into the bearish zone, let's start going on. Now it reached the frontier. What the frontier controller will do, they will try to stop it, isn't it? Illegal immigrant, all right? Now, this to make you laugh a bit, okay? Try to cross the frontier, which is now the 61.8% level. People, the bullish trader will try to stop it. So price was first in a bullish zone. Now it's going to a bearish zone. If you come to the 61.8% level, we will be looking for an opportunity to buy. What we are doing, we are trying to stop it. But we will not just buy straight away. We look for a good reason to buy, which means we're looking for a trading setup, and then we implement a top-down trading method to buy here. That will be a good strategy, yes or no? And it went up. It come back again. Here it is after that, trying to come out again. We stop it again. It went up. Come back. Now it crashed through. He escaped. He escaped. All right. So if now what we can say to trader, if he escaped into the bearish zone from the bullish zone, so now he come into the bearish zone. Who are the winners? The bearish trader will be very happy. They say, all right, now it's in our zone, we'll control it. So if he's coming from the bullish zone, if he's coming from the bullish zone and cross the frontier into the bearish zone, so to speak, if he try to go back into the bullish zone, they will stop it again at the 61.8% level. Because the bearish trader say, no, we don't want you to go back there. So what will you do here? Because he was in the bearish zone, now he's trying to escape the bearish zone. If he reach the 50% Fibonacci retracement level, we'll be looking for a good reason to sell. You try to stop it here, yes or no? All right. If he escape from the bearish zone into the bullish zone, here it is. So he come from the bullish zone, he escape, he managed to succeed again into the West Berlin, so to speak. All right. Now that he's in a safe place in the West Berlin, so to speak, in a bullish zone, if they try to push it back into the bearish zone, what will happen here? The bullish trader will stop it at the 50% Fibonacci retracement level. But you want to understand the movement that is happening. So there are stoppers on the bullish zone, there are stoppers in the bearish zone. But you want to understand what is taking place. Everybody is protecting their interests. So if the price escape from the bearish zone into the bullish zone, but try to go back into the bearish zone, the bullish trader will stop it. All right. If the price goes from the bullish zone and manage to get into the bearish zone, if he try to go back into the bullish zone, the bearish trader will stop it. All right. So price in the bearish zone, try to escape the bearish zone. First play, they will stop it at 61.8. If it crosses the 61.8% level, they want to stop it here. So the point I'm making to you, decision, excellent Fibonacci trading decision can be made in the zone, in the sweet spot zone, either at the top or at the lower part of the sweet spot zone, depending on the movement of the price. Here it is coming from the bullish zone, it comes to the lower part. So in fact, what we are doing like a consolidation trading. So we want to buy near the low of near the low of the band, 61.8% level, if the price is coming from the bullish zone. If it's coming down from the bullish zone, come to this point, we'll try to buy there. All right. If it's coming from the bearish zone, you reach the top, we will sell. Because when we are doing consolidation, we want to sell at the top and buy at the low. But before we buy at the low, in the consolidation, the price should be going down. But what we are looking for, we want it to come down from the bullish zone and reach the low, we want to buy. Another place that we need to watch, which I don't want to dwell on, is the median line of the sweet spot zone. Here it is, this is the median line. Middle line between the 50% and 61.8% level. So here the price came down in a bullish zone, try to escape the bullish zone. They will try to stop it if it come near the low here, normally. But now it didn't come all the way to the low. They will try to stop it near the median line. As always, we are looking for trading setup or good reason why we should buy and sell, depending on the activity that are taking place. We are talking about human being behavior. The sweet spot zone is divided in the prior trend, so we want to see first, okay, a trend that was in place for some time, and we highlight the 50%, 61.8% level, and this is what we call the sweet spot Fibonacci trading zone, and we want to trade it understanding what is taking place, all right, in the financial market. Another thing that we can do is that if we see a bullish trading setup in a bullish zone, that will be a high probability trading setup. If we see a bearish trading setup in a bearish zone, that will be a high probability bearish trading setup. But the frontier between the bullish zone and the bearish zone is the sweet spot zone. We want to play it like we play the consolidation without ignoring, okay, the media line, okay. So as always, maybe this is new to you, or maybe you like this video very much and you want to try it. First, use a demo account. Practice for a few weeks, all right, until you master it before you go live. Always follow the trading drill. Look for a trading setup. Then implement a different time frame trading method to trade it like a pro. This video is for educational purposes only. It's neither a solicitation or an offer to buy or sell any financial instrument. If you have any question or suggestion, put in the comment section, and in due course I will be recording another video to answer your specific question. If you find this video useful, give us the thumbs up. If you dislike it, please give us the thumbs down. But if you think this is an essential tutorial, feel free to share with your friend on Google+, on Twitter, on Facebook, and also on Reddit. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about how to sweeten Fibonacci trading strategies in the financial market. Thank you for watching.